Hello, dear students. So now we are going to take up the discussion of Unit 3, and that is registration and dissolution of partnership. So this topic is actually very simple because we are going to study first of all about registration of partnership, wherein we have already understood in the Unit 1 that in case of partnership, the registration is optional. So there is no compulsory requirement of registration of the firm. But if you require to register or if you decide to register, when do you register? How do you register? With whom do you register? More importantly, here we also study about a concept where, though Indian Partnership Act says that it is optional for registration, however, by putting some kind of disabilities, they indirectly give a hint that though it is optional, we would recommend that you register. Because for an unregistered partnership firm, there are certain things which are disallowed. Okay, like best example to give you is that you will not be able to sue the third party in case of any kind of breach. Third party will have the right to sue you, but you will be not having any right to sue them. Moreover, if there is a dispute between the partners, you will not be able to resolve it through the court of law. So basically, unregistered partnership firm has a lot of disabilities. And in order not to attract those disabilities, they ask you to register. So indirectly, they're telling, though it is optional, we would require to register it. Okay, then. After that, we are going to study about dissolution. As I told you, it is the birth of the partnership and then death. That is how it is going to come to an end. So in dissolution, what you talk about is two ways. One, when all the partners together decide and mutually come to a conclusion that yes, we are going to close, then that is dissolution, no problem, absolutely. But sometimes there is a possibility that every partner does not have the intention to dissolve. So in those cases, what happens? One partner or the partners who want to dissolve will make an application to the court. In this partnership, you should always remember, court will by itself never pass an order for dissolution. Meaning is, suo moto interference of the court will never be there. Like in case of companies, we say that if the company is carrying on the business on fraudulent basis, if the company is doing something wrong, then court by itself also can pass the order. But here, the concept is not like that. When you require that it should happen through the order of the court, then one of the partners, at least one of the partner, has to make an application to the court that you have to intervene and you pass an order for winding up because all of them are not agreeing to it. Okay, so we are going to study about how there is going to be a voluntary dissolution and how compulsory. Compulsory as in what? That court is passing an order where you have no option left, you have to dissolve. Okay, so these are some very simple concepts in this topic, a simple one to take home. When we discuss now, that time only the things will be perfect to you. I would not even require you to revise it multiple times because the language also is very simple. You'll be able to handle it very well. Okay. Only requirement is when you're listening to this, 100% concentration. Okay. It should be, and you should be able to capture every word of mine correctly. Okay. So let's get started with our discussion. I'm sharing the screen with you and then we'll start doing it. So we have the topic and registration and dissolution of a partnership firm. So this I said it is optional. Okay. And this is closure. Okay. Now here two things are there. So first part is going to discuss only about registration and then we're going to discuss about dissolution. All right. You can look at it. Registration and dissolution of the firm. First is mode of affecting registration. That is if you decide. If you decide to register, how will you do it? Then consequences of non-registration, I told you, though it directly does not tell you that you have to register, it indirectly puts a understanding that it is recommended that you register. So it is like recommended. Because if you don't, then these disabilities will apply to you, consequences. Then dissolution of firm, where you talk about without intervention of the court, where we also call it to be voluntary. And dissolution by court is compulsory. Okay, then. So your remaining parts are there. This I think will be taking up only when you do the discussion of without intervention. Okay. Now, let's begin with the first one, registration of the firms. So now there is a partnership firm which has decided to have themselves registered. So first of all, when something is optional, it is a choice of the partners. Then do you think there's going to be a timeline that within 30 days only you have to register, within 1 month only you have to register, within 6 months only you have to register? The answer is no. Because when option is given, then how can you tell within 1 month, 2 months and all? So here for a registration, they say anytime. Anytime if the partners believe they want to register, can they apply to the registrar and get themselves registered? The answer is yes. How in the companies we have registrar of companies, here we have somebody called as registrar of firms. Okay, so there is going to be a registrar of the firms, and to this authority, we are required to submit all the documents. And if this authority is satisfied, then they will issue the certificate of registration to the partnership. Okay, so it's a very simple one. First is application for registration. The registration of a firm may be affected at any time. I told you the word will be what? At any time. Okay, by sending by post or delivering to the registrar. And one logic you know very well, the area in which the place of business of the firm is situated. Here we don't call registered office and all. So it has to be POB. Okay. Post or delivering to the registrar of the area in which any place of business of the firm is situated. So any place. Are they saying the head office? No. Are they saying registered office? No. Any place of business, any POB is settled of the firm is situated or proposed to be situated. Proposed is in the beginning itself you are registering. So you're still not going to picture, but you are in the beginning of it, you're forming it, then you use the word proposed. And you have already started, and after 2-3 years, you decide to register, then it is situated. Okay? Then a statement in the prescribed form and accompanied by prescribed fees. This English should not go difficult to you because you know very well, whenever registrar comes, that is, whenever anything is with the central government, for everything there is going to be a form, and for everything there is going to be a fees. And all of these will be given wherein rules. So in such form and manner as may be prescribed, along with the prescribed fees. So in this statement, what have you write? Very simple things. Will you give the name of the firm? Yes. What business they are doing? Okay, so first of all, the place or principal place of business. Then name of any other place where the firm carries on the business. So basically the branches. Then the date when each partner joined the firm. Name in full and permanent address of the partners and the duration of the firm. Duration of the firm obviously will not be given if it is a partnership at will. Okay, so that is the idea. So very simple words are there. Firm name. Then place or principal place of business. Apart from that, any other place of business that you're operating, name all of them. Then date at which the partners joined. Correct? Then name and permanent address, okay, of all the partners. And finally, if there is a duration finalized, the duration also has to be given. Okay, then this statement, okay, in this statement where all the things you have written, these have to be signed by. That's very important. The statement shall be signed by all the partners. And throughout partnership, remember, okay, everything that you do in partnership, okay, except for one, where we talk about expelling the partner. Except for that one, everywhere you will see all the partners only. All the partners have to agree. And if the partners are not present at that point, can they give it to their agents? They can. Okay. So can you give this power to your agents? Yes. Okay, they can sign. Each person signing the statement shall also verify it in the manner prescribed. Verify as in we have read and understood it. And one thing is very important. The firm name shall not contain any of the following particulars. Try to remember Companies Act. We discuss about undesirable names. So a name which is identical to any other kind of company, or a name which is similar to any other kind of company, LLP, trademark, or which in the eyes of central government is considered to be undesirable. Those names you're not allowed to keep. Like that, a simple provision will be applicable even in partnership. And that is regarding these words, Crown, emperor, empress, empire, imperial, king, queen, royal. They're all the words earlier for kingdom and all for provinces are all used to use. Or words expressing or implying the sanction, approval, or patronage of government. So either it is sanctioned by government, approved by government, or it belongs to government. Any indication like that cannot be used unless, remember here, instead of central government, they say state government should give you the permission. And if the state government is giving you the permission to use these words, okay, to use these words, then are you allowed to use it? The answer is yes. Okay, so these are not banned. Okay, they are not banned. They're saying with prior permission, you can use it. With prior permission. Okay, so once again, all these words. Just try to remember all these which come during the kingdom times and all that. King, princess, emperor, crown, all those. But they're allowed. If you take a prior permission of whom, remember state government. It is not central government here. Okay. So very simple discussion it is. You have to go to the ROF where your POB is situated. To that ROF, you have to submit a statement which is going to be in prescribed form along with the prescribed fee. Here you give the name. Okay, then you give the place or principal place of business, the name of all the other places of business where you're going to carry on your activities. Then you're going to talk about the date on which the partners joined. Then you talk about the name and full, that is permanent address of the partners, and then duration. These should be signed by all the partners. Okay, and if they are not present at that point, it is their agent. They also have to give a verification proof that yes, you have read and understood. However, in this first one, name, you cannot use certain words which are giving a symbol that you belong to the government or they're sanctioned by government or you're approved by government unless you get a prior permission from whom? State government. Okay, so that is the idea. Then registration. Who has to register you? Registrar of firms. So once you submit the above application to the registrar of the firms, and if he's satisfied that yes, all the documents are correct, then he's going to record your details, file it up, and then give you what? A certificate of registration. Okay. When the registrar is satisfied that the provisions of this section 58, that is above section, has been duly complied with, he shall record an entry of the statement in the register called as Register of Firms. Remember in the company I told, ROC will maintain Register of Companies. Your ROF will maintain Register of Firms. Correct? So in the Register of Firms and shall file that statement. So in that file, he'll put that statement. Then he shall issue a certificate of registration. These points are very simple to understand. However, registration is deemed to be completed as soon as an application to the prescribed form with the prescribed fee and necessary details concerning particulars of partnership is delivered to the registrar. So understand, the moment you send it, it is assumed that you're registered. You don't have to wait for the certificate of registration to come. That is the difference between company and partnership. In company, unless you get the certificate of incorporation, you are not allowed to start. You're not even recognized in the eyes of law as a person. But here in partnership, registration is optional. So the moment you put application, it is deemed to have been registered. You don't have to wait for them to revert back saying you have been registered. The moment you apply, okay, game over. You'll be considered to be registered. The recording of an entry in the register of firm is a routine duty of whom? The registrar. Registration may also be affected even after a suit has been filed by the firm. But in that case, it is necessary to withdraw the suit first and get the firm registered and then file a fresh suit. Now, what do you mean by this? I will explain to you only when I come to section 69 after some time, where I'm going to teach you about disabilities of non-registration. That time I'll take you through here myself and tell you what is the meaning here. Okay, now, late registration or penalty. First of all, when registration itself is optional, okay, there is obviously choice of the partners to register or not. Are they going to charge a penalty very heavy or just a little penalty telling that it is important you register? So it is 100 rupees per year. Okay, so that is very simple. If the statement in respect of any firm is not sent or delivered to the registrar within time specified, then the firm may be registered on the payment to the registrar of the penalty of 100 rupees per year. Okay, so it's 100 rupees per year, which is very, very nominal. Okay. Now, this is 69, which I was telling. Consequences of non-registration. I will first explain it to you, then reading will become very simple. Understand, in all the English laws, the UK laws and all, when you look at it, there in their countries, even partnership registration is compulsory. Reason being, first of all, they don't have oral. So because registration means written has to be compulsory. And they have to register because they believe that future disputes and all should be eliminated. There should not be any kind of miscommunication, misunderstandings, and other reasons for all the problems happening. So because of that, every partner should get a right, every firm should get a right against the third parties and all. So these kind of disability should not be attracted to any of them. So from very beginning, it is compulsory that they have to get themselves registered. However, in India, that concept is not there. India still we give a free hand to the partners telling if you want to register, you register, otherwise don't. Nowadays, we see that even if two brothers do partnership firm together, two best friends, childhood friends start doing partnership together, even then they believe in writing everything, reproduce everything in writing, all the terms and conditions in writing, go to the ROF, register it, and everything is on the paper very straight. Reason being, today money is everything. Tomorrow, for all these kind of things, disputes will start happening. Tomorrow there is going to be a misunderstanding, and where two people are involved, definitely there is going to be some misunderstanding happening. Some future problems could happen. We have to predict all that or think about it, which is possible. So because of that, in fact, instead of avoiding all those disputes, all those consequences later on, creating all the trouble, okay, all of these things, they say it is better you register it. So have it in writing. Moreover, what happens? They pressurize you even more. They pressurize you even more. So this section is like persuading you. If you understand the English correctly, it's trying to persuade. Please register. Okay. So what they do is they tell, look, if you don't register, no, we'll have 4 problems. First one, second, third, and fourth. These 4 problems the firm will have to face. First very important thing, firm will not be able to sue third party. You can't sue. Okay. Second, among the partners, okay, or one partner against the other partners, no suit. So among them, mutually, they cannot file against each other. Or they cannot bring together against a firm anything. So against all the partners anything. Third, set off cannot be claimed. No right of set off. What is set off? I'll explain it to you. And D is what? Third party can sue if the firm is doing something wrong. So if you look at the importance of all this, you have no right to sue third party. Amongst the partners, if there is a dispute, no suit can be brought. If one partner has a dispute with all the other partners, he cannot bring a dispute against the firm. He cannot file a case against the firm. Set off cannot be claimed, and third party can sue. Okay. Now, what do you mean by set off? Suppose, basically, if firm is ABC and there is third partner called Z, third party called Z. ABC has to recover some 50,000 from Z. And by the case filed by Z on ABC, what has happened is ABC requires to pay them 75,000. Some problem with it. I'll repeat once again. ABC as a firm and there's a third party Z. ABC has to receive from Z 50,000 rupees. Now Z has filed a case against ABC. And this is maybe a transaction that happened wherein Z has to pay 50,000. Now, due to some reason, Z is third party, he can sue the firm. So he sued the firm and the firm has to pay now how much? 75,000 rupees in return as a compensation. Ideally, what firm will do? 75,000 rupees I have to pay. He has to pay me 50,000 rupees. So I'll do one thing, I will pay him 25,000. This will not be allowed. Meaning is, you cannot set off. If you're unregistered, you have to pay 75,000 to Z, irrespective of how much Z owes you. In fact, if suppose this would be registered, no, then in that case, if suppose case was filed and 75,000 were due, you could set off your money and you could pay the remaining balance. But because you're not registered, this money receivable by you will not be identified by the court and you'll be required to pay come what may entire 75,000 and later you recover the 50,000 from them anyhow. Okay, so that is the idea. So set off cannot be claimed. Okay, and then third party has also the right to sue. So there are major disabilities which you'll be understanding now. Under English law, as I told you, the registration of the firm is compulsory. And therefore, there is a penalty for non-registration of firms. But the Indian Partnership Act does not make registration of the firm compulsory, nor does it impose any penalty for non-registration. However, Under Section 69, non-registration of partnership gives a rise to number of disabilities, which we shall presently discuss. Although registration of firm is not compulsory, yet the consequences or disabilities of non-registration have a persuasive pressure. So I told you this section is more trying to persuade you. So it's creating a persuasive pressure for the registration. These disabilities are as follows. No suit in the civil court. Obviously, all the civil courts only. No suit in the civil court by the firm or other co-partners against whom? Third party. So is the first point clear here? You cannot sue the third party. Okay? The firm or any other person on its behalf cannot bring any action against the third party for the breach of contract entered into by the firm, unless the firm is registered and the person suing or have been insured in the register of the firms as partners in the firm. What is this? We'll take up after some time in an example. Okay, this part you ignore for now. In just 5 minutes, I'll cover this. Then, in other words, a registered firm can only file a suit with third party. And the person suing have to be in the register. What is this? Again, I'll explain when this part comes. So here, as of now, take only after this one. The firm, if not registered, cannot bring a suit against the third party. Then no relief to the partners for set off. Okay. If an action is brought against the firm by a third party, in my example, Z had brought against the ABC, then neither the firm nor the partner can claim any set off if the suit be valued for more than 100. So understand that telling, here I've given the example of 75,000. The moment it crosses 100, set off cannot be claimed. So they're telling if it is less than 100, you can claim set off. When it is going to be less than 100, never. Okay, so if the amount is more than 100, you cannot claim for set off. Okay, or sue other proceedings to ensure the right arising from the contract. You can't sue only. Then, aggrieved partner cannot bring legal action against the other partners or the firm. This is the second point I discussed. Among the partners, they cannot do anything. So if any partner is aggrieved, can you bring any action against the other partner? Against all the other partners? No. So they say against the partner or even all the partners. A partner of an unregistered firm or any other person on this behalf is precluded, that is stopped, from bringing legal action against the firm or any person alleged to be or have been a partner in the firm. But such a person may sue for dissolution of the firm or for accounts and realization of his share in the firm's property where the firm is dissolved. One thing you have to remember, this registration impact will be only and only after dissolution. The moment you are going to dissolve, will you get the power to file the case even if you have not registered? Yes, that's the idea. That means if you want to sue on dissolution, then we don't look whether you're registered or unregistered. For dissolution, even if you're unregistered, you can bring an action. For what all you can bring an action? To check the accounts, to check the realization of the share. That means if 1/3 is your share and if you're not getting it, can you file a case? Yes, but only when? Dissolution. Okay, so during the life of the partnership, if you're unregistered, you cannot sue. But if it is dissolving, then irrespective of whether you're registered or unregistered, will you get the right of suing? Yes. Then I told third party can sue. In case of unregistered firm, the action can be brought against the firm by a third party. Okay, that is simple one. So 3 important disabilities because of which we will go for registration. No suit in the civil court by the firm or other co-partners against whom? Third party. Then no relief for set off of claim. More importantly, it should be crossing 100, which is always. Aggrieved partner cannot sue other partner, nor can sue all the partners. And third party can sue the firm. Okay, there. Exception. Non-registration of the firm does not, however, affect the following. This we already discussed. First of all, in dissolution time, whether you're registered or unregistered, will it impact anyway? No. So can you ask for books of accounts on registration or resolution? Yes. Can you ask for your share on dissolution? Yes. Can you claim for your share on dissolution? Yes. Can you look for accounts? Yes. Everything can be done by you only if it is what? Dissolution. Okay. First of all, this point you already know. Third party has the right to sue the firm. So whether you are registered or you are unregistered, can third party sue? This point we have discussed as a fourth pointer. So this you already know. Then the right of the partners to sue for dissolution of the firm or for settlement of the accounts of the dissolved firm or realizing of their property of the dissolved firm. Will it get affected? No. Whether you're registered, unregistered or registered. If it is dissolution, you have all the right. Then the power of an official assignee, a receiver of the court, to realize the property of the insolvent partner and to bring an action. So a partner has become insolvent. Okay. Who has appointed the official assignee? Court. Okay. So when the official assignee is trying to realize the property of the insolvent partner from the firm, then can the cases be filed now? Suit can be filed? Yes. The power of an official assignee, that is a representative of that insolvent partner who is appointed by the court to realize the property and bring an action. Can he do it? Yes. The right to sue claim for set-off if the value is less than 100. So can you claim this third thing? Sorry, second thing? Yes. If the amount is less than 100. Sorry, less than 100. The right to suit and proceeding instituted by LR or hires of the deceased partner of the firm for accounts of the firm or to realize the property. This you can connect here, okay? So one is during dissolution, all or any partner has all the right. Has all the right. Okay, for what? Asking for accounts, claiming share. Okay, all these things they can do. And when death happen, then you either have LR or your heir. These also can ask for accounts and share, whether you are registered or unregistered. Okay, so that is the meaning. So you look at it, very simple discussion again. Third party thing already you know because it's covered here. Then this also part is covered here. If it's dissolution, then in that case you can ask for accounts and realization of your share. So this also is same: dissolution, settlement of account, realization of property, and also for accounts. Then if it is insolvent, see they are using death, insolvency, both. So if it is insolvent, official assignee is appointed by whom? Court. So when he is going to realize the property, can he file a case? Yes. On behalf of that partner, the answer is yes, irrespective of whether registered or unregistered. Then can you have the right to sue for set off? Yes, but the amount should be less than 100. Then deceased partner will have legal representative or the legal heir. Okay, and for their share of profit or their share in the partnership. Okay, for the recovery, can they file a case? Yes. That is a right of suit or proceeding instituted by LR or heir of the deceased partner for what? Accounts and to realize the property. Okay, that's the idea. Now comes to this part which I was telling you, I'm going to explain after some time, this one. Okay. And now after I complete the discussion of the following, you'll be able to understand this sentence perfectly well, this entire thing from here. Okay. Let me do this thing first. Now, first I explain it to you with an example so that reading will become very easy. Suppose there are three partners, A, B, and C. They have got themselves registered. So the statement that they filed with the ROF, you know, one of the thing is name and permanent address of the partners. Okay. So here whose names are appearing? A, B, and C. Now, A, B, C together is registered. And these three partners' names are appearing where in the statement filed with ROF. And there is a third party, Y. And this firm wants to sue Y for some reason. The question is the suit maintainable? Is it acceptable by the court? First question, is it registered? Answer is yes. But second is very important. Registration you can take home very easily. You know it has to be registered. Second important thing is, if it is registered also, these partners who are going to sue, all their names should be appearing wherein? The statement filed with ROF. So in this case, is A, B, and C appearing in the ROF? With the details of ROF? Yes. So this suit is maintainable. Okay, this was simple. Now let me take one more example. Same firm A, B, C. Now there is a partner D who is going to incoming partner. Now what happened is this firm is registered. But when this partner joined, the firm did not inform the ROF. So in the ROF, when you look at the statement, whose name is still appearing? A, B, and C. Okay. Now they're telling A, B, C, D as a firm wants to file a case against Y. The question is this suit maintainable? If you understand the logic correctly, first of all, is it registered? The answer is yes. But are all the names of the partners appearing with the registrar? The answer is no. So if every name of the partner at the time of filing the suit is not registered with the ROF, then in that case, the suit is not maintainable. Okay. So you understand two conditions. It should be registered plus all the partners' names should appear with whom? ROF. One more example. A, B, C are partners. They have registered. In the statement with ROF, ABC name is appearing. C resigned. But in the name of ROF, still changes have not been made. So now, AB wants to file a case against Y. Is this suit maintainable? The answer to that is two questions. Is it registered? Yes. The partners who are filing the case, are their names appearing with the registrar? Yes. So this suit is maintainable. Is the point very clear? So that is the thing. Every time two situations you have to see to understand whether a suit is maintainable or not. Maintainable means acceptable by the court or not. So if you look at it, now you read that part. Okay. Now look at this. The firm or any other person on its behalf cannot bring an action against a third party for breach of contract entered into by the firm unless the firm is registered and the person suing AB, ABC, ABCD or have been shown in the register of firms as what? Partners. The statement you filed with the registrar and that he put it where in the register of firms? In the firm. In other words, a registered firm can only file a suit against third party. And. Only registration alone is not enough. And the person suing, that is partners, should have their names entered where in the register of firms. Okay, which is maintained by the ROF. Okay. Similarly, here also it is continued. Yeah, that is the thing. Here it is. This part. So two conditions are, if you understand very carefully, it should be registered and the persons should have been in the register of firms. Two conditions. Okay. Now, moving on further. Now look at the example, it will be 100% sensitive. A and company is registered as a partnership in a firm in 2017 with A, B, C as partners. So when they registered, who partners were there? ABC. So with the ROF, whose names are appearing? ABC's names. In 2018, A dies. In 2019, B and C sue X in the name and on behalf of A and company without any fresh registration. Fresh registration means you have not informed about the death to the ROF and so their changes have not been made. And because of that, ABC still appear to be partners there. Now the first question for our consideration is whether the suit is maintainable. Without looking at the answer, you tell me. Is the firm registered? Answer is yes. Are the partners B and C who are suing, their names appearing with the ROF? Yes. So are both the conditions fulfilled? The answer is yes. Okay. As regards the question whether in the case of registered firm whose business was carried on even after resolution of the death of one of the partner, a suit can be filed by the remaining partners in respect of the subsequent dealings or transaction without notifying to the registrar of the firms. So it is okay if you don't inform. Why? Because the point is who are suing, they should be appearing with whom? ROF. So in this case, if A is dead, B and C are still there, right? So the suit will be what? Maintainable. So if admission happens, you have to tell because then the partner suing will not be known. But if death, resignation, retirement is happening, then in that case, you are not going to, it's not mandatory to inform, even then suit will become what? Maintainable. It was decided that remaining partners should sue in respect of the subsequent dealings or transaction, even though the firm has not been registered again after such resolution and no notice of partner was given to whom? Registrar. So is the suit maintainable? The answer is yes. Understand, registered again, it is a registration is compulsory. So again, you don't have to register. The test applied in these cases is whether plaintiff satisfied the two requirements. Which two requirements? One is registered and the partners suing, their name should appear, have been shown as partners in the register of firms. In the view of this position of law, the suit in case of B and C against X in the name and on behalf of A and company is maintainable. Is it 100% clear now? Okay. Now, in the above example, what difference would it make if in 2019, B and C had taken a new partner, D, and then filed a suit against X without fresh registration? So this is not maintainable. Why? Because persons suing are who now? B, C, and D. But did you register again? No. So to the ROF, only people known are B and C. D is not known. So because of that, it cannot be maintainable. Where a new partner is introduced, the fact is to be notified to the registrar, who shall make a record of the notice in the entry relating to the firm in the register of firms. Therefore, the firm cannot sue as D's name has not been entered in the register of firms. It was pointed out that in the second requirement, the phrase person suing means person in the sense of individual whose name should appear in the register as a partner and who must all be partners in the firm at the date of the suit. At the date of the suit, you should be a partner. Okay. One more thing I missed out, I said you'll be understanding later on. Just check. Yeah, this one. This I told you. After I do section 69, you'll be able to understand. Now you read the English. Okay. Registration may also be effected even after a suit has been filed by the firm. But in that case, it is necessary to first withdraw the suit and then get the firm registered and then file a fresh suit. So is it that I'm not registered, okay? And I want to file a case. So what I'll do one thing. I'll file a case, then go for registration. Law says no. First you withdraw the suit, get yourself registered, and then what you'll do? Go and file a case. हाँ बोलो. सही है. हम्म. दिख रहा है. देखो कहीं देखो बोलिए कहीं बार. ठीक है. Okay. With this, let us continue now. Okay. Now, next one. We have dissolution of the firm. Just let me clear this. Now, there are two things: dissolution of firm and dissolution of partnership. Two words. Both do not mean the same. Okay. Dissolution of firm. Firm means all the partners. Dissolution of firm is where the partnership is coming to an end. But dissolution of partnership is much more lesser scope, or maybe less scope is covered here, where we say if there is a death of the partner, if there is a retirement of a partner, okay, if there is admission of a partner, then there is change in the constitution. When there is change in the constitution, we call that to be dissolution of partnership. So their only relationship of some or one partner is changing with the others, but firm is continuing. So basically, when you say the relationship amongst all the partners is coming to an end, business is closing, it is closure, then that is called dissolution of firm. But when there is simply a reconstitution, okay, where relationship of only one partner or one or two partners is changing with all the others, then we call it to be dissolution of partnership. Okay, so we can say dissolution of firm includes dissolution of partnership, but dissolution of partnership does not mean every time dissolution of the firm. Clear? Okay, now read, you'll follow. According to Section 39 in Indian Partnership Act 1932, the dissolution of partnership between all the partners of the firm is called the dissolution of the firm. So dissolution of partnership, relationship of each partner with each other is changing. Thus, the dissolution of the firm means discontinuation of the legal relationship existing between all the partners of the firm. But when only one or more partner retires or becomes incapacitated from acting as a partner due to death, insolvency, insanity, the partnership, that is relationship between such partner and the other partner, is dissolved, then the rest may decide to even continue. In such case, there is no, in practice, no dissolution of the firm. So when only one partner relationship is changing because of death, incapacity, insolvency, anything, and remaining partners decide to continue, then in that case, it does not amount to dissolution every time. So that time we call it to be dissolution of partnership. The particular partner goes out, but the remaining partner may carry on the business of the firm. Then it is called as dissolution of what? Partnership. Okay? In the case of dissolution of firm, on the other hand, the whole firm is dissolved. The partnership terminates as between each and every partner of the firm. It comes to an end. Okay? That is the understanding. So when you look at the differences, you can keep your hand on the right side. Very simple. Where does continuation of business happens? In dissolution of partnership or dissolution of firm? In dissolution of partnership. Because one part of relationship will change, remaining all will continue. So it is what? This does not affect the continuation, but this obviously will close the business. Because relationship between all partners come to an end. Winding up, where it happens? Where do you have to sell assets and pay liabilities? It is going to be where? In dissolution of firm. So we say you have to realize all the assets and settle all your liabilities. Here, no. You prepare, instead of that, a revaluation is done. So you must have done admission, retirement, death and all. Where you don't prepare a realization account, you prepare a revaluation account. So that the share will be given to old partner. That is the person who's leaving also. A part of it. Correct? But in case of dissolution, you prepare a realization account. So where you have to realize the assets and pay off your liabilities. Order of the court, absolutely not required for admission, retirement. Okay, partnership is not a separate legal entity or an artificial person in the eyes of law. So court intervention is minimal. So if a partner wants to come in, if a partner wants to go out, it will be as per the agreement. Court, no. So dissolution of partnership is not ordered by the court. But I told you in the beginning, if all the partners are not ready for the dissolution of the firm, but one partner says, I want to dissolve, and the others are not ready to it, or out of five, four are agreeing, one is not ready, then you can't go for dissolution. So in that case, we say the four partners have to apply to whom? Court. So there is a possibility that sometime dissolution of firm may be ordered by the court. So here the word will be maybe. Okay, because if all agree, then you can do without the court also. Scope, which includes what? Dissolution of firm includes dissolution of partnership. But dissolution of partnership does not necessarily include dissolution of firm. May or may not, does not necessarily include. But this will include. Final closure of books will happen where? In the dissolution of firm or dissolution of partnership? Only in dissolution of firm. Here, why you close the books? They'll continue. Okay, then. So that is the basic difference between dissolution of partnership and dissolution of firm. When relationship of all the partners come to an end, dissolution of firm. When one partner's relationship comes to an end with the others and the remaining decide to still continue, then it is dissolution of partnership. Okay, all right. Now is a very simple discussion. Mode of dissolution. In the beginning itself, I told you, one by the order of court. One without the order of court, which we also call it to be voluntary. Okay. So order of court is our next discussion. First we'll take voluntary. Okay. Let's pick up first one. Dissolution without the order of the court, also called as voluntary dissolution. First is dissolution by agreement. Now from the beginning, I'm telling you what is the meaning of the word agreement. All partners. If all partners together decide that they want to dissolve, then is it called a dissolution by agreement? Yes. When all the partners agree to it, it is dissolution by agreement with the consent of all the partners. So two possibilities. Either in the beginning, when they entered into agreement, that time only they decided if the situation happens, we will dissolve. So is it agreed by all of them? So this also is agreement. But when they started, they didn't discuss about any matters where dissolution can happen. And today, after 5 years, they sit together and decide to dissolve. They're sitting together and dissolving. This also is what? By agreement. So either it is initially by the contract only they decided how to dissolve, or later due to some circumstances together they decide. In both we call dissolution by agreement. So section 40 gives right to the partners to dissolve the partnership by agreement with the consent of all the partners or in accordance with contract between the partners. Contract between partners means the contract already made. And you tell me when they made this contract, was the agreement signed by all? So indirectly one and the same. So I'm telling you either it's happening in the beginning by the contract or later they give a consent and all of them together decided. So one and the same. So either in the beginning by the contract or later. So in both the cases it is called as dissolution by agreement. Now compulsory dissolution. Now here very important thing is this compulsory do not consider it to be order of court. I'll tell you why. Because we are looking at the heading as what? Without intervention of court. Correct? So that time you cannot say this compulsory means order of court. No. You need to understand this is compulsorily voluntary, you have to retire or you have to dissolve. Compulsorily voluntary dissolution. Meaning is if suppose there are 3 partners, out of which 2 partners become insolvent. Okay, then in that case, can this firm continue? No. Compulsorily, but voluntarily they have to retire. They have to dissolve. Correct? Like that. Okay, so understand. A firm is compulsory dissolved. However, when more than one separate adventure or undertaking is carried on. So here first thing you have to say. If you are having only, it should be like this. If the firm is having only one business and the business becomes illegal or by order of court or law, it's not allowed. Then can you continue? No. Then in that case, you have to compulsorily dissolve. Okay, then. However, if suppose it's not your only business, you have 2-3 businesses. So if one business is cancelled, can you continue for the remaining? Yes. In that case, you'll not compulsorily dissolve. However, when more than one separate adventure or undertaking is carried on by the firm, the illegality of one or more shall not itself cause the dissolution of the firm in respect of lawful adventure and undertaking. So if it is one and that is declared as void and you have no other business, then compulsory voluntary wind up. Second, if you have 2-3 businesses, then out of which 1 or 2, they are considered to be what? Void because of change of law and all. Then can you still continue? Yes, you need not compulsorily wind up. Okay, that is the idea. A firm is carrying on business of trading of a particular chemical. This example I give many times in the class. Law is passed which bans the trading of such particular chemical. Now tell me they are dealing with that chemical. Now the chemical is banned by the country. So now can they continue? No. So they have to compulsorily wind up. That too voluntarily. Okay. The business of the firm becomes unlawful. And so the firm will have to compulsorily dissolve. Okay. Then third voluntary is when dissolution on happening of certain contingencies. These are all the points which I already told. When the firm is constituted for the fixed term, after the term is over, have they to dissolve? Yes, on the expiry of that term. If they're carrying on for a particular adventure, for a particular occupation, if the occupation is completed, have you to dissolve? Yes, particular partnership. By death of a partner, this is not always, okay? If suppose there are 4 partners and 3 die, then okay, you have to dissolve. If there are 4 partners and 1 die, can they decide to continue? Yes, so it comes under voluntary. Okay, so it could be sometimes that because of death it happens, And obviously, when death is considered, always insolvency also will be considered. So these are all contingencies, may or may not happen. Okay. So these two obviously will happen because the time will come to an end. Adventure will complete. Death contingency. Insolvency also contingency. Insolvency adjudication by the court. That's very important. These are when happening of certain circumstances. Then dissolution by notice and partnership at will. I don't have to explain you again. I explain you the concept of partnership at will. In partnership at will, is duration decided? No. Is the determination of partnership done? No. So in that case, idea is very simple. If both the things you have not discussed, then in that case, we say that it is partnership at will, where any partner who wishes to dissolve has to give a written notice to the other partners, and then the firm has to compulsorily dissolve. Correct? So is it voluntary coming from one partner? Yes. So it is a notice. Where a partnership is at will, the firm may be dissolved by any partner giving notice in writing to all the other partners of his intention to dissolve. In case date is mentioned in the notice, so whatever date is given in that notice, no, that is considered to be the date of dissolution. And if date is not given, then we know for every offer, communication is compulsory. So considered to be from the date of communication. The firm is dissolved as from the date mentioned in the notice as the date of dissolution, or in the case if no date is mentioned, as from the date of communication of that notice. Because offer is complete only when communication is done.
दर्श को डांस आ रही है निकल के बाहर
Yeah.
को डांस हो बाहर
चलो अभी वो
चल
She's there, yeah?
नीचे जा रही हो
एनर्जी तो कितना बोल रहे
हाँ खेला रेवन दे लेटे एंजॉय मन दिखाओ ना पहले
हैं जाओ ना फोन करो ऐसी कोई तो जा रहा है
हाँ आराम ना मैं भी आउट सोचू चेंज करके थोड़ी देर
चेंज कर खत्म कर
होमवर्क
हाँ
नोबडीज
ये होमवर्क हाँ पता हो जाइला आया पता भी करा दी हूँ मैं तेलुगु ही चना एक पेज लिखना है करा दी हूँ बस होमवर्क कर अपने बेटो एक ही पेज है फक्त तेलुगु हाँ कर लेना अभी ठीक आया पता मगर आज नहीं टेंशन नको ना okay so that is the idea so you can see here there are only and only four that come here all are simple first as I explained it to you dissolution by agreement. This could either be now a current decision where all of them are agreeing, or it could be a past decision that when you had a contract done, that time only you decided how you'll dissolve. Compulsory dissolution, here the content is missing. Okay, you have to understand if it is, adventure which has been made as void or maybe not continued because court has passed an order or maybe government has declared it to be unlawful and all, then in that, or all but one partner has been adjudicated as insolvent, then in that case, obviously, you have to voluntarily, compulsorily dissolve. Okay. But if suppose you have multiple adventures and if one has become illegal, then obviously you don't have to go for compulsory dissolution. It is going to be that you're allowed to continue for the remaining legal ones. Then this talk about dissolution and happening of contingencies. All the four are very easy. One fixed period after the completion of that. One particular adventure closes, that also closes. Death, not necessarily insolvency, but could lead to dissolution. And then is when you're adjudicated as insolvent. The last two may or may not dissolve. If there are more partners, then the remaining partners might decide to continue. So it comes under voluntary. And partnership at will, we know it very well, and notice has to be given. Okay, by the partner willing to dissolve, and that is to give in writing to all the other partners, and they can dissolve it. The date of dissolution will be the date given on the notice, and if they have not mentioned the date, it is the date of communication. The last part is dissolution by what? Court. Okay. So court can dissolve on the following grounds. Now, very important point, always remember here. Suo motu interference of the court will never happen. So compulsory one partner at least should apply to the court. So everywhere when you read, no, you will see that the word used will be on a suit of the other partner. Okay? A partner suing. Partner suing. So compulsory, the word is what? One partner has to sue minimum. Otherwise, it won't happen. Okay? So let's do it now. So look at the words, okay? I'll explain you one by one all. Okay, and then we can read it together. Insanity, unsound mind. So what has happened is a partner, basically what happens is sleeping partner becomes unsound or insane. It doesn't have that much impact. But if the working partner himself is becoming unsound, then it is going to have a very severe impact on the business. And understand, if the working partner has become insolvent, does he have the position that does he have the capacity of actually going and filing the case against telling that we want to dissolve and all? Not practically possible. So either other partners have to go and sue telling that we want to dissolve it, or this partner who has become insolvent, we call him to be the next friend. Next friend means the person who's taking care of him or the person who is with him. That person can also apply to the court and ask for dissolution because he has become unsound. So because he does not have the personal capacity of doing it, his next friend will be allowed. So only in this case, insanity and unsound, it is not only the other partners has to sue, and the next friend also can. Okay, that is the idea. So once they sue, if the court believes, yeah, it is required, then they have to. Permanent incapacity. So if the partners are permanent incapacity, like there has been an accident and completely bedridden, or maybe a illness which has no recovery now, okay, it is continuously ill health, something which does not have a recovery, you're physically completely disabled, or mentally disabled completely, then in that case we call it to be distressed and you not be able to continue the business. So in that case, it's better to wind up. Okay. So, but here understand, normal sickness would not be considered to be permanent illness. That will not be a ground for dissolution. Misconduct is the working partner, anybody who's having the control. If they're trying to mismanage the affairs of the business, trying to manipulate the funds, trying to defalcate the cash, if all these things are done, then the other partners will go for dissolution because this partner will not agree. So if one partner doesn't agree, you can't have voluntary, so you have to apply to the suit for the court. Persistent breach, continuously. For example, if suppose in the agreement it is told that every partner in a month can withdraw only 20,000. But there is one partner or two partners out of the 10 partners who are constantly withdrawing more than 40,000 every month. Once fine, second time fine, third fine, fourth. Every time if they're doing the same thing, then the other partners will not be okay. So sometimes what happens, these two partners who are actually doing this wrong will not be ready for dissolution. So the other partners say, no, look, you are consistently doing this. We are not okay with it. It is not bringing a good reputation. It's not helping us to continue the business properly. So we'll do one thing. We'll file a suit and we'll get ourselves dissolved, firm dissolved. So there is persistent, continuous breach. Transfer of interest. So basically here the English you have to remember like this. A, B, C partners. We know B can transfer his share, A can transfer his share, C can transfer his share. In my example, I'll say B is transferring the share to Z. Compulsory consent of all the partners. But the point is, he has transferred to the person who is such that if you're not able to pay him, he can recover the amount as if they are arrears of land revenue. So what is the meaning of these words? Meaning is, understand, land revenue is all your property taxes and all. Taxes that you pay on the property. These are so dangerous that if you don't pay and if there is a delay, then these people, authorities, have the right to even seal your property. They'll seal it without any doubt. Okay. Now tell me, if you have given your property, given your share to a authority or a person who has such kind of recovery rights, then don't you think firm will not be okay with it? Correct? So in that case, if suppose a partner is transferring interest to a person, okay, who has such a right that he has the right of recovery as arrears of land revenue, then in that case, that time you gave consent, so it got transferred. But now you don't want to continue. So these two partners now will have to apply to the court and ask for winding up, ask for closure. Okay, then. If there are continuous losses, then you have to understand there are some partners, like suppose there are 6 partners, out of which 2 are very practical, 4 are very emotional. So these 2 are what? Too much loss is happening last 3-4 years, continue loss, 8 years have passed, only loss. Let us now close it. We are having nothing but the losses. Other 4, no. We started with so much of interest. It is our first business. We have so many dreams behind it. If your dreams are there and if it is not working out, it's time for you to change it. You can't sit behind that being emotional fool that time. But then it is very difficult to explain these kind of people that yes, we have to close and do something else. So in that case, when all the partners don't agree and there are 4 partners like this who are very, adamant, I'm not going to change, then the other 2 partners have only one option, go to the court. So if they're continuous and perpetual losses. And then there are other which are just an equitable grounds. What are just an equitable grounds? Something where partners are continuously fighting. They're not in talking terms only with each other. They don't talk to each other. Then there's constant miscommunication, misunderstandings. Then there are four partners. Every time two say something, two say something. Deadlock is there. They're not able to decide anything. Okay, they decided to start, they were doing a business in a factory and the factory only got destroyed. The substrantum only lost. Okay. Then one of the partner is doing gambling on stock exchange and all, where you believe all these things are not good for us. So in that case, on just an equitable ground, there could be any other reason for which a partner can sue, file a suit, and say that you want the firm to be dissolved. Okay. So let's read it. It's very simple discussion here. First one is incapacity and unsound mind. This is the only case where, except for other partners, you'll also have next friend coming in. Okay. Where a partner, obviously not a sleeping partner, has become unsound. The court may dissolve the firm on a suit of the other partner or the next friend of the insane partner. Temporary sickness is no ground for dissolution. I told you temporary sickness, no. Okay, permanently problem is happening, they'll not be able to recover and all. Then in that case, obviously, we're going to consider it to be what? It could be a ground for closure. A, B, and C are partners in a firm. A has severe infection and got typhoid. Typhoid is temporary, okay, not permanent. Due to this, he was not able to conduct the business for a few days. This kind of illness cannot be treated as a ground for dissolution. Permanent incapacity, when a partner other than the partner suing, because one partner has to apply to the court, has become in any way permanently incapable of performing his duties as a partner, then the court may dissolve the firm. Such permanent incapacity may result from physical disability, illness, etc. Okay? Misconduct. Where a partner other than the partner suing, always remember the word will be other than the partner suing. That mistake should not happen by the partner suing. No? Is guilty of a conduct which is likely to prejudicially affect the carrying on of the business, that is harmful to the carrying on. The court may order for dissolution of the firm by giving regard to the nature of the business. It is not necessary that misconduct must relate to the conduct of business. That is very important. It might be that in his personal capacity he has done something which is bringing discredit to their business. So he's been known for some kind of fraud, or he has done some kind of money laundering, or maybe he has taken loan from the bank and not repaid, because of which goodwill is getting affected. Now tell me, when your partner is a person whose goodwill is bad in the market, then you believe this kind of person dealing with or being with is not good for me also. So what happens? Though in his personal capacity he has done something wrong, but is it impacting my business also? So yes. So they say your misconduct does not always relate to business. It could be something beyond business also. If in his personal life also he has done a misconduct, but that is impacting my reputation, my business reputation, then I want to discontinue with him. Okay, that is the idea. So need not relate to the business. The important point is the adverse effect of the misconduct on the business. In each case, nature of business will decide whether act as misconduct or not. Nature of business, okay? Persistent breach is continuous breach, where a partner other than the partner suing willfully or persistently commits breach of agreement. So I told you 20,000 was the thing given in the agreement. But did they breach the agreement? Yes. So continuously they were breaching it. Relating to management of the affairs of the firm or conduct of the business, or otherwise so conduct himself in a matter relating to business that is not reasonably practicable, okay, for other partners to carry on the business. So if we continuously keep withdrawing more, for other partners, it is not reasonably practical to carry on properly with him, then the court may dissolve the firm at the instance of any of the partner. Following could be the reasons: embezzlement, chori, theft, keeping erroneous records, manipulation. Then other partners say, with you, we can't do with the business. Holding more cash than allowed. I told you 20K is allowed, but he's having always 40K withdrawn. Holding more cash. Refusal to show account despite of repeated request. So sleeping partner meets the active partner and says, show me the books of accounts. It is his duty to show him, right? As a partner. He says no. Or every time he comes, Kalana. Okay, next week, I'm busy. You're doing something. So in this case, you're persistently breaching the contract. So this act, the sleeping partner now will apply to whom? Court, and say, I want the firm to be dissolved. Because I believe there could be erroneous transactions, there could be some embezzlement. Okay, he's doing some kind of manipulation. If one of the partner keeps erroneous accounts and omits to enter receipts, or if there is a continuous quarrel between the partners, or there is such a state of thing that destroys the mutual confidence. See, these two should not come here, okay? Continued quarrel or mutual confidence is getting destroyed, then we call it to be just and equitable. Okay? The court may order for dissolution of the firm. Then transfer of interest, I told you, transfer it to somebody who has a very great power. Where a partner other than partner suing has transferred the whole of his interest in the firm to a third party. or has allowed his share to be charged or sold by the court in the recovery of the arrears of land revenue due by the partners, then the court may, due by that partner, then the court may dissolve the firm at the instance of other partners. So attached to somebody who has the power of recovering like arrears of land revenue. Perpetual losses, where the business of the firm cannot be carried on except for loss. That is, how much ever you do, there's only loss. The court may order for dissolution. Just an equitable, I told you, any other ground which they believe it is important for them to dissolve, they're not working anymore together. Deadlock means not able to decide. Always 50% is not agreed to one, 50% agreed to another. Partners are not talking to each other. So I told quarrel will come here. This quarrel part, no mutual confidence, means they're not talking to each other. Okay, then. Loss of substantum, I told the factory itself is destroyed. And one partner is entering into gambling and all, which is not good for reputation. Or cash losses could be possible. A lot of things are there. Okay, then. So dissolution of firm, we have two. Order of court. Sorry, without the court and with the court. So if you look at it, by the court, insanity, misconduct, permanent incapacity, persistent breach, transfer of interest, continuous losses, and equitable grounds. There's an equitable grounds. And what is about voluntary? First was agreement, compulsory voluntary dissolve on happening of contingencies and by notice in the case of partnership at will. Okay, then. Now, consequences of dissolution, what will happen? If dissolution happens, suppose the dissolution happened on 1st of April 25. So before that, everything that happened, will you continue to be liable? Yes? Yeah. Then, understand one more thing. Up till the time all assets are sold and all liabilities are paid, will every partner be jointly and severally liable? Yes. Then, when you require to wind up, will you spend some other expenditures also like brokerage for selling the property and all that? Will all partners will contribute equally to that also? Yes. Okay. So all of these things are important. So they say the liability of the acts of the partners done after dissolution. Now dissolution means you have to compulsory give public notice. Because active partner we know, you have to give public notice. Dissolution is overall closure. So have you to give public notice? Yes. So until you don't give public notice, the third parties will continue to believe you to be partners. Okay, then in that case, even if the partner is dealing in individual capacity, firm only will become responsible. Okay. So two reasons. One is public notice not given. Second, the third party does not know that you're no longer partners. Or third party is believing that you are partner there. So they're extending credits and all to you. Okay. Liability of the acts of the partner done after dissolution. Notwithstanding the dissolution of the firm, the partners continue to be liable as to the third party for any act done by the firm which would have been an act of the firm done before dissolution until public notice is given. So to the third party, they will be as good as they were liable earlier, no? Same way they'll be liable. Unless they give what? Public notice. Provided that the estate of the partner, now very important. In case of death, it is deemed to be public notice is served. So understand, if A, B, C are partners, C is dead, and because of which ABC has come to an end, then your public notice did not be given. So also understand that this partner, okay, he is not responsible for anything that happens after the death. So these two partners will continue to be liable for not giving public notice. This person's property will always be liable to the extent of his death only. After that, no. Provided that the estate of the partner who dies or who's adjudicated as insolvent, because these actually are deemed public notice. And adjudication happens by court, which automatically public notice. Or a partner who not having been known to the persons. You also know sleeping partner does not require what? Public notice. That means it's sure they're telling only active partner. Okay, retires from the firm is not liable under this act for the acts done after the point he ceases to be a partner. So death, insolvency, and sleeping partner. These, no public notice required. The moment they cease to be the partner, liability ends. But for other partners, basically focused active partners only, compulsory public notice. If not given, estoppel. Okay. So notice under subsection 1 may be given by Section 45 is twofold objective. It seeks to protect the third party dealing with the firm who has no notice of prior dissolution. So if you don't have the notice of dissolution, so it's going to protect the third party. That is quite understandable. It also seeks to protect partners of the dissolved firm from the liability towards third party. So understand that death partner, Okay, they are LR, the insolvent partners, the sleeping partner. Okay, law does not giving them the obligation of public notice, right? It is also protecting whom? The dissolved firm also from the liability to third party. X and Y, who carried on the business in partnership for several years, executed on December 1st a deed dissolving the partnership from the date, but failed to give a public notice of dissolution. On December 20th, X borrowed in the firm's name a certain sum of money from R, who was ignorant about the dissolution. So, will the firm be liable to pay this amount? Yes, even if one partner has done it. Okay, even then all partners will become responsible. So, X and Y have to give. In such a case, in such a case, Y also would be liable for the amount because no public notice was given. Okay, then. However, there are exceptions to the rule here, and exceptions to whom it is. We know already: estate of the deceased partner, insolvent partner, and dormant partner. That is, partner who was not known as a partner to the person dealing with the firm. Okay, so in simple terms, this is the criteria. Okay, that is consequences. A right of the partner to have the business wound up. Now, if you have listened to the classes very carefully, I always say the meaning of the word business is assets and liability. So don't you think every partner has the right to get the assets sold and pay the liabilities from the assets sold? Yes, that is the meaning, the right of every partner having the business to be wound up. On the dissolution of the firm, every partner or his representative, that is in case of death or insolvency. Okay. Okay, as against all the other partners or their representative, to have the property of the firm applied in the payment of debt. So whatever property is there, you sell it and you apply. Apply means use it for the payment of debt and the liabilities of the firm. And to have the surplus then distributed among the partners or their representatives. So suppose 10 lakh is the asset, 8 lakhs is the liability, the remaining 2 lakh has to go to the whom? Partners, and that too in their PSR in proportion of their profits. Then, continuing authority of partners for the purpose of winding up, I already explained this to you. On 1st of April, if you dissolve, and suppose the entire winding up is happening up to 30th of April, then the entire period, whatever expense has been incurred for winding up purpose, for any other expenses like registration of the property, transfer of properties, all of that thing, sale of property to brokerage and all you're paying, some stamping you're doing and all that, whatever expenditure you incurred for the winding up purpose, all of the partners will become jointly and severally responsible for all the expenses that has been incurred up till the date the actual resolution completes. After the resolution of the firm, the authority of each partner to bind the firm and the other mutual rights and obligation of the partners continue, notwithstanding the dissolution, so far as may be necessary for the winding up of the affairs of the firm and to complete a transaction begin but unfinished at the time of dissolution, but not otherwise. So those which are pending and all the expenses for winding up, all will be jointly and severally responsible. Okay, they'll be having a binding effect on the firm, irrespective of dissolution. Provided that the firm is in no case bound by the acts of the partner who has been adjudicated insolvent, but this proviso does not affect the liability of any person who after the adjudication represented himself or knowingly permitted himself to be represented as a partner of the insolvent. Meaning is, if insolvent person does something, he himself only will be liable. Because in insolvency, understand, public notice is not required only. Because it's automatically a deemed public notice. Court is ordering it. So they're telling firm will not be bound if insolvent partner does something in the name of firm. Not at all. Okay, but if suppose the partner knows that he's dealing and either he's a part of it, then obviously partner will become liable. Okay, because that's wrong then. Okay, otherwise insolvency is deemed a public notice. So always it is assumed the third party knows about it. So will firm be liable for what he is doing on the name of the firm? No. Okay. Mode of settlement of partnership. This you have to understand very easily. Suppose if there is deficiency. Deficiency means assets realized 10 lakhs, liability 12 lakh. So from the assets, you have paid how much? 10 lakh. Now 2 lakh more is there to be paid. We know here it is unlimited liability. Correct? So then first you have to use all the reserves, then you look at all the capital contribution of the partners. And even then if there is 50,000 short, then 50,000 partners will bring in their profit sharing ratios. From where? Personal assets. Correct? Then. Suppose if the money collected is 15 lakhs, then in that case, first you have to pay all the liabilities. Then you pay partners' loan. Then you pay the partners. in their PSR. Okay, that is the idea. So it's simple. In settling the accounts of the firm after dissolution, the following rules shall subject to the agreement. So if they have agreement, then obviously that will follow, otherwise this. If losses are there, including deficiency in the capital, shall be paid off first out of profit, next out of capital. So I told you here, 2 lakh is the deficiency now. So first you have to look how much is the profit available and then how much capital contribution is there. So use it out of profit and then from the capital. And lastly, if necessary, by the partners individually in the proportion in which they were entitled to share profits. Individually means personally. Okay, so if you look at the balance sheet, assets, liabilities, profit, that is reserves, capital. When these two you see and there is shortfall, first use reserves, then go to capital. Okay, and if that also is falling less, then obviously in that case you have to go to personal liability. But if there is no deficiency, they say the assets of the firm, including any sum contributed by the partners to make up the deficiency. Okay, so if the partner has withdrawn, so he has to pay back, right? So bring the capital intact. So you have to add back to the deficiency, must be applied in the following. First, you pay debts to the outsiders. Then you pay debt to the partner who has given loan. So partner's loan will be next. Then pay their capital balances, whatever is remaining. And then even then after that money remains, then you distribute to all the partners in their profit sharing ratio. So in paying each partner ratably what is due to him on account of the capital. Okay, I think there was some issue. Okay, I'm not able to share the screen, but I think there are only few things to be there. We'll continue it. So you can see there, they're told if there is a loss, then you have to first see what's there in the profit and then look at the capital, what is there, use it. And if that also is insufficient, then you have to bring the personal assets. And then when there is money available, including all the deficiency contributed by the partners, then first you pay the outside liability, then you pay the partner's loan, then you give their capital. And after that also, if money is remaining, then you have to give it to all the partners in their profit sharing ratio. Okay. Then if you look at the example 6 given there, X and Y were partners sharing profits and losses equally, and X died. On taking partnership accounts, it transpired that he contributed 6,60,000 to the capital of the firm and Y only 40,000. The assets amounted to 2 lakhs. In such situation, the deficiency 6,60,000 plus 40 minus 2 lakhs is equal to 5 would have to be shared equally by Y and X's estate. That's fine. If in the above example, the agreement provided that on the resolution, the surplus asset would be divided between partner according to the respective interest in the capital, then the ratio will not be that. Okay, then the ratio will be 6,60,000 is to 40,000. Okay, that would be the way. The partners according to their respective interest in the capital, and on the dissolution of the firm, the deficiency of capital was found, and the asset would be divided between the partners in proportion of their capital, with the result that X's estate would be the main loser. Okay, because he'll get only in 660 is to 40 it is. So he'll get only 40. Okay, then. Now, very logically, you tell me if a firm has taken a loan, okay, and there is firm's property jointly held. So this firm's property will be first be used to pay the firm loan or partner's individual loan. Okay, so for example, there is ABC firm who has taken a loan from the bank. So bank has given the firm a loan in the name of A, B, and C jointly. Okay, and A in his individual capacity has taken a loan separately for a car, maybe for his own car. Okay, now, when the firm realizes the assets, will the money be used to pay ABC bank loan or will be used to pay the car loan of A? Obviously, and obviously, will be used to pay what? Firm's loan. And then, if the money is remaining after that, then every partner will get their share. And from their share, what did they receive? From there, if they want to pay, they can pay their personal loans. On the contrary, suppose a personal loan is there and firm's loan is there. If it is a personal asset, that will be used to pay your personal loan first. And then it will be used to pay the loan of the firm. Okay, so that is personal debt, firm's debts and separate debts. Where there are joint debts due from the firm and also separate debt due from any partner. Okay, so in a bank, one debt is due from whom? The bank, and the other is due from the partner. The property of the firm shall be first applied to be paid the debt of whom? Firm. And then if the money is remaining, will each partner get their share? And then that share can be used to pay his personal loan. And if there is any surplus remaining, then the share of each partner shall be applied to the payment of his separate debts. Separate debts is individual debts, car loan. Then suppose if there is separate property of the partner, that separate property will be first used to pay his separate debt. And then after paying his separate debt, that will go and get attached to firm's loan if we are not able to pay the firm's loan out of firm's property. Okay. Separate property of any partner shall be applied first in the payment of his separate debt. And then if surplus is there, then the payment of debt of the firm. Okay. So they're trying to match it. Personal first, firm first. If something remains, you can cross it. Okay. But remember, when it is firm, then you will not get full amount remaining. You'll get only your share. And from your share, you'll be able to pay your separate debt. Okay. So that is regarding the topic of dissolution and registration of partnership, which I consider to be very simple. Okay. Please do the MCQs and the descriptives also properly. The very, very simple discussion and quite easy to understand. Okay. So with this, I'm closing the unit 3, registration and dissolution, which I believe you must have understood really well. So please quickly go through properly. Just for a summary, registration optional. But if you register, you have to register with the ROF along with the prescribed fee and in the prescribed form. File the statement with the details of your name, place of business, name and place of all the other businesses where you're carrying out, name of the partners, when the partners joined, duration of the firm. All this has to be done to the registrar and it should be signed by all the partners. And if they are not available that time, they are agents acting as the representative. Certain words which belong to the kingdom periods and all that can be used provided they are patronage of the government or they're symbolizing something affiliated to the government. So you require prior permission of the state government. Once all this reaches to the firm, then, registrar, if he's satisfied with all the documents, then he will register you, file your statement, and in the register of firms, your name will be written. From then on, you are a registered firm, but you don't have to wait for the certificate. The moment you make an application, you're deemed to have been registered. During registration, if the process has been delayed because of your wrong filing and all, then you'll be punished with 100 rupee per year fine. Then Section 69 gives a persuasive pressure that though it is optional, we would require you to register because they attract 4 disabilities. First, firm cannot sue the third party. You cannot claim set off. Partners among themselves cannot sue each other, nor one partner can sue all the other partners. And third party gets the right to sue. However, in case of dissolution, in case of insolvency, in case of death, okay, when somebody is bringing an action against the firm, registration or unregistration will not impact. Third party will always have the right to sue. And insolvency time, the official assignee can obviously bring an action against the firm, whether firm is registered or not registered. And if the claim is less than 100, irrespective of registration, you have the right to sue it. Sue. Compulsory to have a suit maintainable, 2 conditions. Firm should be registered, and with the registrar, the names of all the partners should be appearing who at that point of time are going to sue. If both conditions are fulfilled, the suit is maintainable. Then we go for dissolution of the firm and dissolution of the partnership. Dissolution of partnership is a relationship of one partner closing with other partners, wherein he might leave, he might resign, but the others will continue. However, dissolution of firm is a dissolution of relationship of all the partners taken together, wherein closure will happen, realization of assets will happen, relationship of all the partners will come to an end. In partnership, it is revaluation, no closure, no final settlement. So dissolution of partnership may lead to dissolution of the firm, but dissolution of firm is not always dissolution of partnership. And in dissolution, we have 2, which we have detailed just now discussed, compulsory and voluntary. Involuntary, we have 4. It is by agreement. It is compulsorily, voluntarily to be wound up. It's happening of contingency, and then partnership at will. In case of compulsory, we talk about order of court is coming up, where compulsory one partner has to file a case. In that, it is first one, that it could be by incapacity, unsound mind. It could be by permanent incapacity. It could be misconduct, persistent breach of contract, continuous persistent losses. Then it could be that you have transferred the share of your profit to the third party. Okay, there could be just an equitable ground like no and not talking terms and all that. Consequences are, up till the date of dissolution, every partner will be liable. But if the public notice of dissolution is not given, then it is as good as the firm is still there and all the partners will be responsible. However, 3 partners will be acquitted here. One is the insolvent partner, second, a deceased partner, and third, sleeping partner, because they are not in the position of giving a sleeping, they're not in the requirement of giving a notice. However, up till the date of dissolution, okay, till everything is closed, every partner jointly responsible to commonly contribute for the winding up activities. Every partner has the right to ask the company or ask the firm to actually sell off the assets and use this asset to pay the debts and remaining surplus to get for themselves in the PSR. If there is loss, first use the surplus, reserves available. If that is not there, then look at the capital, use that. If that also is less, then you have to bring your personal assets. Then, if it is a good situation, then first you use the money to pay off outside liability. Then you use the money to pay the partner's loan. Then you pay towards your capital, and remaining money will be distributed among the partners in their profit sharing ratio. All right. So this, and if there is a firm's debt and the separate debt, firm's property to pay firm's loan, separate property to pay first the separate loans. And then if the surplus is remaining there, interchangeably can be used. So that is all regarding registration and dissolution of partnership.